Hello, and welcome to the Joss Brown Podcast. With over 40 years of combined financial planning experience serving high net worth clients, we will discuss our favorite topics, concepts, and stories. Hello, welcome back to the Joss Brown Podcast. I'm Devin Joss, and today we have a special guest, Jeremy Jordan. So thank you for coming on the podcast.
Awesome. Thanks for having me.
Yeah, of course. I have a brief little introduction, just a little bit about Jeremy before we get into it. He's a senior mortgage banker at Atlantic Bay Mortgage Group. He's a board member of the Virginia Peninsula Association of Realtors Charitable Foundation and the immediate past president of the Peninsula Mortgage Bankers Association. When he's not working, he's heavily involved in the community in several different clubs. He's board member of the Poquoson Educational Foundation, and on other terms, he coaches a couple different sports programs. So what sports are you coaching right now?
I do, yeah. So thanks for having me again.
Yeah.
So currently at the moment, I've just transitioned from Grafton High School, where I was the varsity boys basketball coach for the past 15 years. And now I'm back home at Poquoson High School, which I'm sure we'll touch on, where I came from down the road. But so I'm at Poquoson right now. I'm coaching my daughter's travel softball team, which is a 14U program out of Yorktown, Virginia, and regularly coach my son's rec basketball team as well. So Stay busy.
Staying busy with the local sports. That's good.
For sure.
You talked a lot about community service as well. Did you want to discuss kind of what you're currently doing with that?
Yeah, I think, making a difference in the community is really one of my things that I want to be remembered about in terms of like establishing a legacy. Mm-hmm. The mortgage business affords me the opportunity to, put food on the table for my family and help others, which is something that I love doing. But from the local community standpoint, that's a big part of my day-to-day life. So being involved with the Poquoson Lions Club, Poquoson Educational Foundation, was former vice chair of the Poquoson City School Board, amongst other things with my church as well. So making a big impact in my community is very important.
Yeah, that's awesome. Sounds like a busy time.
Yes.
So going back to the mortgage side of it, you've come to speak to us a few times, just giving educational and just teaching us what's going on in the industry. But how did you first get into it? Are you from this area? What school did you go to?
Yeah, I think everybody has a story about how they got into the mortgage business. Some probably more unique than others. I would say for me personally, I was had an accounting finance degree from Randolph-Macon College in Ashland, Virginia. Had a great experience there. I remember coming home one afternoon. I had helped a buddy of mine open up a sports memorabilia store, also in Yorktown. And my father telling me, hey, you have until December, which I think it was like September, when he told me that you're falling off my insurance. So you really need to start focusing on a career at this point. I had interviewed a lot of places. I just hadn't found what I thought was the right fit. So a cousin of mine was being born at Riverside Hospital, and a member of our, not immediate family, but a member of our family was also present, who had been in the mortgage business for 38 years. And in speaking with him, he said, Jeremy, I believe you'd be a great fit to get into the business now. And if you think about it, that timeline was winter of 2006. So some of us that are a little bit older remember what happened in 2007 and 2008 with the start of the recession, the housing bubble. But there I was, bright-eyed and bushy-tailed, entering the mortgage business in 2007. I think ultimately it gave me a good sense of how mortgages work. And it was at a time when folks were fleeing from the mortgage business. I saw great opportunity still to be able to help others. And it was a good time to learn the business as well. So I like to think that everything happens for a reason. I think ultimately entering when I was able to do so in 2007 gave me the opportunity present day to see a bunch of different market cycles. So again, those experiences helped pave the way for, I think, continued success now, in 2024. But again, overall, it's been a great experience, and that's kind of my story about how I got involved.
Yeah, wow. Starting back in before that big housing crisis and everything, that must have been interesting times.
Yes.
So we learned about how you started this career. What are the things that you like about it the most?
I think ultimately for me at this stage of my career, I still have a ton of excitement when I sit down with a first-time home buyer
Mm-hmm.
for the first time, or sit down with a previous customer whose now children are buying their first home.
Mm-hmm.
That's always exciting. The home buying process, I think, for many folks is still, one of the most memorable things that you'll do, over your adult life. And I think being able to sit down with that first-time home buyer, but yet also be able to sit down with a very seasoned borrower that might be buying $1 million+ home in the market, and giving them sound financial advice. I think that's the one thing that kind of makes me different, is just the ability to be able to sit down with that first-time home buyer or that very senior, tenured buyer, and be able to offer really good, sound financial advice toward putting a game plan together for their success.
Yeah. When you talk about getting a mortgage in your first house being one of the biggest purchases you're going to make in your life, besides maybe a car.
Right.
So us as financial advisors, that's kind of what we help our clients talk through, and then you would kind of be the person to go with the what does that meeting look like for a first-time home buyer?
Yeah, so this day and age, I think through the COVID years especially, a lot of folks got away from doing more of the in-person meeting. And the technology that we have now is set up that you don't have to do this in person.
Yeah.
But I think that there's nothing better than being able to sit down at the table face-to-face or at somebody's desk to kind of guide them through the buying process.
Yeah.
Or at a minimum, being able to jump on a Zoom call or a Teams call, to have those types of conversations and kind of lay out the framework there. I think the old way of doing business is still the way of doing business that I still kind of appreciate and like doing. But by all means, I really want to make sure that their plan is crafted around, if they have a financial advisor, incorporating their advisor into the mix, having a conversation with their CPA if that's necessary. There are a ton of times where I'll have to get on the phone and jump on and talk to a parent because they've gone home and told a parent something and it's confused the parent even, or they have questions. So I think, being an open book and being able to provide them with sound financial advice and give them, kind of the framework in which to go about it, I think that's what people are looking for this day and age.
I think people just like to be able to have their questions answered in a thorough way so they can understand kind of what's going on. Yeah, for sure. I mean, you've got some folks are such that they just simply want to know that it's going to be taken care of and don't care as much about the every step by step of the process. And there's others that sit down with me and say, hey, I really want to know every step of the process and what that might entail. So again, every client has a different set of expectations, but being able to speak with them directly and put that plan together is important. Yeah, that's kind of similar to us. We have, I guess, 2 or 3 different types of clients. Ones that you can have a whole hour and a half meeting and all they hear was you're in a good spot.
Right.
And then the others, they need to know every single detail.
Sure.
And
exactly.
So we cater to either one. So
exactly.
What are the misconceptions you often see in the mortgage process?
I think the biggest misconception this day and age is just the amount of liquidity and how much I need for my down payment.
Okay.
And I think that's driven primarily from parents. And I'm a parent myself, so the day will come when I'll have that conversation, I'm sure. But I think ultimately there is a misconception that I'm going to need 20% down on this purchase. And the reality of it is very few first-time home buyers have the opportunity to put 20% down on their purchase.
Yeah.
So I think that's probably the most common misconception. It is centered around down payment.
Okay.
So when we meet with a first-time home buyer, we do lay out a number of different financing options, just in an effort to really give them the tools to make an informed decision as to what option is going to be best.
Gotcha.
This day and age, you can actually get in a number of really good, sound first-time home buyer programs with little to no money down. And there are some unique grants and stuff available as well, depending on their income, their credit score, and some things like that. So, being able to sit down with that client and get under the hood and really find out what their financial picture looks like, determines what then is the next path of what loan option is best for them moving forward.
Yeah, there's so many different ways to go about thinking the down payment, whether it's 20% or whatever possible loans you can get.
For sure.
But that's something that each situation is different, and you do need, if you don't have it yourself, then some good financial advice for that, because it's a very important decision.
Yeah, and there's instances where folks will come in saying, hey, I've got, on a $300,000 home, I have $30,000 that I want to allocate towards, the down payment. And oftentimes we will utilize that as their down payment. But there are instances where, I might show them, hey, with 5% down instead of 10%, so putting $15,000 down, your monthly payment would be this, and this is the difference that would have on your monthly mortgage insurance or PMI. And again, just being able to provide them with a couple different financing options, and giving them some options around what's going to work best for you right now. Is it, hey, I want more of a down payment up front so that I can have a smaller monthly payment, or hey, I don't mind paying a little bit more monthly because I'm anticipating a raise sometime next year.
Yeah.
But I'd rather have more liquidity available to, buy furniture or do enhancements to the property. So I think just opening the door to other financial options, in the form of down payment and stuff is probably the biggest common misconception.
Do you have similar conversations with refinancing? Is that?
Yeah, so, again, from the refi side of things, I think the biggest goal for a refinance is trying to better an individual's monthly cash flow.
Okay.
Right? I mean, a lot of the time that's why somebody's calling to refinance, is that they are looking for a way to, reduce their overall net monthly payment. I would say of late, more so than ever, unfortunately, consumer debt has hit an all-time level. And unfortunately, folks have put themselves in a position where credit card debt has mounted. But yet, the nice part about it is their property values have potentially gone up. So there's been a number of instances this year, for example, where we've had to, again, kind of lay everything out to see what makes sense. But being able to get rid of 22, 24, 28% credit cards, even if their rate goes from, say, 3 to 6%. The long-term benefits of eliminating that consumer debt, and making sure that they don't fall into that trap again, where we get everything paid off only for them to want to come back 2 years later to go through the same process again. So love the repeat business, but our goal is to try to educate them on things that they can do to so that doesn't happen again. So that's we've seen an uptick in cash out refinances this year as well.
Gotcha. So just talking about the industry as a whole, what are some significant changes or rules that you've seen so far?
I think my industry, just like most of the industries in the financial sector, are always constantly, having reform done. And some of it has to do with the ever-changing guidelines on different loan programs and things of that nature. So it's really kind of an evolving door. Like, guidelines and regulations are always changing in my industry. So having a team that's present, a compliance team that keeps us abreast of the evolving changes in our industry, ensuring that as a company as well that we maintain the Atlantic Bay brand. We've been fortunate to have the same name, same CEO for the last 28 years, and there's not a lot of local mortgage companies around that can say that. And we're fortunate to be in that position, to be the number one lender in Hampton Roads, and still have that same name, same CEO, from a branding standpoint as well. So we continue, I think, to do things the right way in an industry that is, always going to continue to have reform and changes done. But again, it's always forever evolving.
Yeah. For us, we have we go to conferences every year and different webinars. Is that similar for your industry as well?
Yeah, definitely similar. Similar. The ongoing regulations in terms of making sure we meet, the continuing education requirements as well, to maintain our licenses. It's usually always a rush at the end of the year for every mortgage banker to get their continuing education out of the way. But in my industry, I am a licensed mortgage professional. There are some banks and credit unions that the branch kind of holds that, so they don't have to be licensed under that. But individually at Atlantic Bay, each one of us are licensed professionals.
Cool. That's good. Going back to you personally, do you have any good personal success stories or people you look back at and be like, man, that was a good.
I mean, I think there's a number of those. Anytime, for example, I'm able to help an individual, maybe buy their first home from somebody within their family. Mm-hmm. It's always, interesting to me the number of cases where I'm able to look back and they're able to tell me, hey, I'm the first member of my family to have ever owned a home before. Mm-hmm. And the list goes on and on. I mean, there's a ton of success stories. I think for me, ultimately, there's challenging. You run into folks all the time that have some challenging things that come up in life, and they may have even lost a home previously from a medical related event or a situation that was out of their control. To help an individual rebound from a challenging event, and I'm actually in the midst of doing that right now with an individual. Mm-hmm. And one of my goals for her this year was to ensure that we found a home for her and got her in a home before Christmas.
Okay.
And we're trending towards being able to do that.
Yeah.
So those are success stories to me, at the end of the day. But just helping people that might have had some sort of a traumatic life event, give them some resources and some assistance and some guidance to get them back on track, to get them to the finish line, to know that there is a path forward. Is exciting.
Yeah, that's awesome. It's always good to hear when people are proud of the people that help them out and
for sure
get into the finish line.
For sure.
Before we started this, you were talking a little bit about interest rates. Did you want to discuss?
Yeah. The topic that I get every day.
Yeah.
I think ultimately right now we went from COVID being the lowest of the lows, where we were seeing rates in the 2s and the low 3s. That was the outlier. If you look at the last 30 years, your rates in the 2s or 3s never existed up until that point. So I think what we've done is we've come back into more of a 30-year average approach now, with rates being back in the mid-6s. Forecasted for 2025, I think there is the belief that rates will be in the higher to mid-5s, pretty much across the board. Like the Mortgage Bankers Association is anticipating somewhere around 5.9%. Fannie Mae is anticipating somewhere around the mid-5% range. So I think the belief is that next year we will see a period of a little bit of a dip in interest rates. But there's so much driving factors that are impacting interest rates right now with inflation and things of that nature. Obviously, come January there'll be a new president and some potential reform that comes with that. I think whether it been a Republican or Democrat in office come January, I think both sides believe that they want to try to find ways to make housing more affordable. So again, I wouldn't be surprised to see a little bit of a drop in interest rates. It could be a gradual thing, to get back to the mid-5 range. I think that would put us in a really good spot, for 2025 moving forward.
Yeah, that'd be great. Well, any final piece of advice to offer the listeners for today?
Man, I appreciate you having me. I think ultimately, it's just putting together sitting down with somebody that you know and trust. Read the online reviews about that individual. Take the time to speak with family and friends. Get some local recommendations. I believe dealing locally is of best interest for someone looking to go through the homeownership process. But being able to take the time for somebody to sit down with them and have a consultation, even if it's a Zoom call or Teams call, being able to get somebody face to face and kind of guide them through the process. And I think ultimately too, I would encourage if you're a senior in high school, if you're in college, take the steps of the process to establish credit as well. I think being able to have a credit score when you're encountering your first job out of college is very important. And credit impacts so many things. But being able to get on as an authorized user, even from a parent's credit card, or open up your own credit card. I'd be remiss to say that make sure if you're in college right now and seeing this, I remember back in college many years ago, they used to give free hats and koozies and stuff if you enrolled, and give away all this free stuff. The key with credit is proper utilization.
Yeah.
So having access to credit and then using it properly and making on-time payments is critical.
Mm-hmm.
So that $500 limit or $1,000 limit doesn't mean you got to blow through that in the first weekend of getting that credit card, because knowing that that next month that payment's going to be due and that interest is going to start accruing if you don't pay it off. But I think establishing and setting up credit and ensuring that you have a credit score, when you get out of college and are about to enter that first job is very important.
Yeah, great. Well, this has been a great time. Thank you for joining us on the podcast. We'll have Jeremy's information in the description for the video.
Awesome.
But yeah, thanks for joining here. And we will be doing an episode on credit where Jeremy will be joining us as well. So feel free to listen to that. Yeah,
thanks.
Thank you. Thank you for tuning in to today's episode of the Joss Brown Podcast. If you'd like to see more episodes, visit our website at jossbrown.com.